National Security Advisor Jake Sullivan wrapped up his three-day visit to Beijing this week, culminating in a surprise meeting with Chinese President Xi Jinping. Sullivan telling reporters that he raised concerns about China's focus on economic security and the impact of Chinese business subsidies on the U.S. economy. But with the new administration coming in January, how is China preparing for the next 4 years of U.S.-Chinese relations? For more, we welcome in Shehzad Qazi, China Beige Book International Managing Director. Good to see you. Appreciate you coming on down here. How do you see this going? Let's say Vice President Harris does become president. I mean, how might her approach to dealing with China differ than President Biden?
Yeah, I think this is the question that's top of mind for the Communist Party right now. Number one, there's going to be much more continuity than not, right? But that's about all we know. There isn't a Harris-China plan as yet. We also aren't really hearing of any heavyweights within the campaign or policy advisory teams that are China experts. So what are we going to get out of them? Right now, not much.
I would love to get your take on this. I had the opportunity to have former Commerce Secretary Wilbur Ross on my Yahoo Finance podcast, Opening Bid, this morning, and I asked him about former President Trump's new tariff proposal. Take a listen to this.
So he's deadly serious about lowering the trade deficit, getting rid of the inequalities, getting rid of the violation of intellectual property rights. Whether that will come out as a big blanket tariff or something else, that's a different story.
And conversely, if Trump wins 4 more years, are we looking at that trade war that maybe didn't really erupt in his first presidency, but could erupt if he wins the White House?
So I think looking at 2025 and onward, there is a round 2 of a trade war coming between the U.S. and China. If we have a Trump presidency, you're looking at this chaotic avalanche of announcements and policy ideas and actual policies that are going to come down perhaps in a far more aggressive manner than we saw the first time around. But even if you don't get a Trump presidency, what happens is whoever's in the White House, if it's a President Harris, their hand will be forced to get a lot stricter, a lot harder, a lot tougher on China.
You're out with the latest report as well on the state of China's economy, which showed revenues, profits, hiring, wages as well in August, all slowing from a year ago. What is the latest data showing you?
Yeah, look, the Chinese economy started off on a very strong note, I think, at the beginning of the year. But it was looking pretty clear that from that point onwards, there was going to be some moderation. And in August, you're certainly seeing this mild slowdown. Now, that said, the roof isn't exactly collapsing. And I think the market has been way too pessimistic on China. The data are actually somewhat boring, I'd say. You're still getting a modest recovery through the course of the year. So we're not anywhere near a crisis. But if you're looking for a rally in the equity market, yeah, you're not going to like the figures that just came out.
One of the most well-known equity market names that's attached to the Chinese economy is Alibaba, quite frankly. And there's been a little bit of an about-face that we've seen between their relationship with government and now making it through this period where they were under high scrutiny. What does that signal to you about how the region is approaching publicly traded entities and just business as a whole?
Yeah, look, I think the idea was we're going to cut Alibaba down to size. That's what Xi and company wanted to do. And I think they feel like they've done that for now and maybe forever. This does not, I think, spell a change in the overall approach towards business and in the overall approach towards regulation writ large. As the policy environment changes there, I think we could see fresher companies coming under crackdowns. We could see the national security lens that they've taken about every company, every sector, that remains dominant in China. So policy risk is perhaps receding. It's not going away.
What does that mean for ByteDance then?
Look, ByteDance, they've made it clear. They're not going to let them sell the algorithm. They're going to maintain total control. TikTok is controlled by the Communist Party. That's the fundamental reality.
What does a trade war with China look like? What does that frame that for us?
Yeah, it can take a couple of different shapes. First of all, you've got the tariff war, which is, I think, the most blunt instrument you can use, right? Come up with anything. What is made in China? Put a tariff on it. So it could be sector-wide, industry-wide. It could affect a lot of goods. Then you get to the more sophisticated parts of it, which is where you start getting into things like export controls. You can get even more aggressive and sophisticated and do things like real outbound investment controls, work with Congress on things like raising de minimis rules as they affect packages coming in, Shein and Temu packages that come in today. So it just depends on how sophisticated and how aggressive the person occupying the White House wants to be.
Do you think we get to the point where U.S. companies, I think about a Walmart operating Sam's Clubs in China, I think of Starbucks, that they somehow get kicked out of the country?
Look, anything is possible. Nationalization is even a bigger risk. Those companies have decided that they are in China for China forever. And I think the real goal is, how do you bifurcate that? How do you let American companies and foreign companies work within China, so long as the Communist Party allows them to, while protecting national interests, core national interests? That's a big debate in D.C. and people are still trying to figure it out.